stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
And we have a couple of those stocks to let you know about with our strategists, Ben Rains, who's here with me at the desk, and Brian Boland, who always joins us via Skype on the remote. Brian, we're going to start with you this time around. You have a company called Simulations Plus.
Simulations Plus is my pick for the week, and it's SLP is the ticker. It is a Zacks rank #1. That's a strong buy for you keeping score at home there. It has that growth and value divergence that I love to see. So that means a strong growth style score of a B and a weak value style score of an F. So I like to see that in my stocks because it tells me right away I'm on the right path. Because I like growth stocks. I don't like the value plays. But let's take a look at why this stock is a Zacks rank #1. We'll just start here with the earnings history down here at the bottom of the page. We can see there was a miss, but 3 beats over the last 4 quarters. So three beats, 1 miss. Average positive surprise is a respectable 8.2%. But the idea really here is the earnings estimates are trickling higher. We can see next quarter, this quarter is standing still at 9 cents. Next quarter moving from 10 to 11 to 12 cents. And here we see that impact on the full year. So going from 43 to 44 to 46 cents. We like that kind of upward movement. And then next year where we're really starting to see it, 54, 59, and then 63. So moving higher, and that's what we like to see. We like to see earnings estimates continuously moving higher throughout the time that we're following this. So, what does this mean here for the valuation? Obviously, the valuation on this one is getting up there. So we got 83 times forward earnings. That is a big number with only 16% top line growth. That's small for that sort of multiple there. 18 times book is tremendously huge, and 20 times sales is also a big number. But you got good margins in here, 25%, as you would expect for a software name. Now, the thing about this stock and why I like it a lot is this chart. And you can see very recently here, there's a lot to like here. It's just all of a sudden just straight up and away. And I think right now the stock is even over $40 here. We can see on a week morning here, Monday morning, July 29th, we can see this stock is up 4% already today, and I saw it actually a little bit higher. So we're busting over $40 here. That's this sort of move. When you have a straight up stock move like that, you're going to have the valuation kind of lift with that, and you're going to need the earnings to pick it up over time. So as things progress, as we get better earnings results, more and better earnings results, we will see the valuation get more in line. But right now, this stock is definitely in runaway mode, and get on the train, that's my recommendation, Terry.
All right, Brian, thanks for that. Benjamin, you're looking at Decker's Outdoor.
Correct, yeah. So this is a brand that might not like everyone has heard of, but they definitely know one of their brands at least. That's UGG. They make those boots that seem to be popular all over the world, especially in Australia and North America. But the stock is up 143% over the last 2 years. That crushes its industry's 40% average climb. Mm-hmm. And if you do notice, the stock does tend to be a little choppy, but it's on this nice upward trajectory. It actually fell last week following its earnings release on Thursday, but that's because it's been up so big over the last several years. And you'll see that it does trade heavily around earnings pretty much all the time. Even though it actually posted stronger than expected results, it seemed like maybe just a little sell-off just to take some of your winnings. But overall, the company's been great, and one of its newer brands has really stood out. That's this Hoka 1-1. And it's an interesting name, so we might as well just go to show it because it's easier to show what their shoes look like. But this is the brand that in Q1 of their fiscal 2020, which was their most recently reported quarter, the brand itself was up 70%. It's now its second biggest earnings or revenue driver. So it's this outdoor shoe brand that for both men and women, trail running, hiking, gym, fitness, it's $180 is kind of their high-end price point. kind of competing in that same world as Nike, you would say. And they're also having, similar to UGG several years ago, is having a little bit of like a celebrity moment where LA, Hollywood, it's become kind of that new it shoe over the last several months. And they've also partnered with an up-and-coming Lululemon competitor, which is called Outdoor Voices. So you'll see those in their stores that are now popping up in Austin, in Chicago, in Brooklyn, in those kind of hip fashion places. So see this brand specifically to help drive Decker's growth going forward. And then if you see, we're calling for about 5% top line growth this year, 5% next year, and a little bit of an earnings slip up in fiscal 2020, their fiscal 2020, with a big then comeback in 2021 after that. And you also see that following their most recent earnings release last Thursday, all of the fiscal 2020 and fiscal 2021 earnings have really shot up recently. So that's why it's currently a #1 ranked stock here at Zacks. So it's definitely a stock to be on the lookout for, this Decker's outdoor brand.
All right. Do you own either of these two?
No, I do not.
Hey, Brian, I don't want to interrupt your morning moon pie, but do you own either of these two stocks?
I do not.
Okay. Thanks for that. And don't forget, always more stock information, and that's on our website, Zacks.com. Get over to the homepage to start looking through it. With Ben and Brian, I'm Terry Ruffalo.